Well, right now, gold isn't owned by that many people in the world. It's certainly making headlines because all of a sudden an asset that most people thought played no role in economics is suddenly hitting new highs, as is oil, as is food, various raw commodities. And people are going, what's happening? How can gold be going up here, and then thinking of gold going beyond $1,500 an ounce to $5,000 or beyond? How can that happen? Is it a bubble? And I'd say we're just at the start. We've moved maybe a third of the way through the progress because gold is underrepresented in most portfolios. I would say less than 1% financial assets globally are invested in gold. Gold at $5,000, I haven't really looked at the rest of the world, but I have looked at the governments of the Western world, and they're all printing money. They're expanding their monetary base very aggressively. The governments believe they can solve all the problems by writing checks or issuing money that they don't have the revenue to back up. They can't support it with the revenue generation. The elected politicians around the world seem to be wishing to push the problem into the future, into a time that they're not in Parliament. So one day we're going to have to pay the price. And you either do it today or you do it later, and it's going to hurt more then. Germany in the early 20s, that was happening to Germany and Austria. Here, this is happening to the entire Western world. We've had 30 or 40 years of easy access to credit, low-cost credit, and that's led to a consumer confidence to spend. It's caused corporations to spend. The government has spent very freely, all believing that the economy wasn't going to change. But what we've seen is there's been a great deal of manufacturing move to lower-cost centers, particularly in Asia. They've been able to produce goods a lot cheaper than we've been able to produce them, so our cost of living has been held constant, or actually some goods have gone lower. That period may be ending, so I'm saying looking forward, you're going to pay more for your food, you're going to pay more for your fuel, you're going to pay, I don't know if you'll pay more for your housing, but your money's not going to buy as much. I think Europe has some issues right now dealing with some of the partners of the Union that aren't upholding their end of the bargain. And to be asked to help bail someone out when the other side isn't helping to bail themselves out it's a big political issue. I think people should be more responsible. So I think the tack that the German people are taking is saying, why should we be doing this, is a very good question to be asking of the leaders of the country and the leaders of the economic union. I don't know what the outcome would be, but I do think that you have to have people responsible for their actions and people who had no involvement in creating the problem. If they're being asked to make a loan, that's one thing. And if you're going to get your money back in a year or 2 years, that's good. But are you giving the money away to someone who's spent it foolishly and going to do it again? And they'll ask you again if they want more money. If I was asked in Canada to bail out somebody and I had a voice, then I would say, well, if we're giving it to them, when are we going to get it back? This isn't a gift. This should be returned to us, and there should be conditions on it, just like lending money, a bank lending money to anybody else. I'm an advocate of minimal-sized government, and that we have too many rules today. In fact, when I think of North America, we have more rules governing the securities market than any one individual can ever know. So it creates all sorts of opportunities for abuse. The governments have called for greater transparency in the capital markets, disclosures, what people own, say corporations, the ownership. But we're not getting that demand for transparency in the government. And the government is behaving like they've been elected and they have been invested with the absolute power to do whatever they think is right for the country. But maybe what they're doing is wrong for the country, and maybe I believe we need more transparency in the dealings of the government. And maybe there will be voices that stand up and say, wait a minute, you can't do that unless you tell me why you're doing it. I'd say the elected officials in most of the Western world are behaving like absolute dictators. I haven't, but I think I have small, but not like gold. Energy is essential to our economy. It provides the fertilizer to grow our crops. It provides the fuel to transport the food to the markets and for us to take it home. We can't ignore it. And in a world where the fiat currencies or the paper currencies of the world are falling in value, those costs of energy, food, even water are going to go up. To me, the ultimate currency is gold. So when you ask which currency do I want to go in, it's gold. You would probably also look at currencies of countries that produce commodities that all of us use every day. Food, energy, water. I think it's a good time to invest in silver. The recent fall was a result of a very rapid run-up in price. Last September, silver was $23 an ounce. A couple of weeks ago, it got almost to $50 an ounce. In the last several months, it just ran too fast, too hard, and to me, it looked like it was going to come back. But it's going to track gold and probably outperform gold because of a historic exchange ratio. Historically, you've had 16 ounces of gold by being equal in value to 1 ounce of 16 ounces of silver being equal to 1 ounce of gold. From 1980 to present, that exchange ratio has moved from 14 ounces of silver equals 1 ounce of gold to a high of 100 ounces of silver buys an ounce of gold. Beginning of 2010, it was 65, and it got to a low recently of about 32. So from here, you could get anywhere from a double to a triple in your money in silver. A house isn't liquid. If you own a house, it's not like owning an ounce of gold. If you own an ounce of gold, you can sell it and get your money in 2 days. If you own a house, you can't sell it and get your money in 2 days. If you have a strong economy and a growth curve, then that's not a bad decision. If you don't have that economy, you might find you have a commitment that is a little harder to deal with. But most people are comfortable with real estate as opposed to, say, something like gold. And you have to live you have to live somewhere. There was a recent weakness in our share prices. It was in the whole sector coming off. I think there's the price of the metal had been moving up, and then there was a disillusionment why all the natural resource, all the precious metal stocks didn't follow. And I think that's due to a disbelief in the market that the price of silver, of gold, was going to stay at those higher levels. And so the stocks fell off. In our own, I think we've got, in all three companies, I own anywhere from 20 to 30% of the companies. Personally, I paid for them with cash, not free. All the companies are well financed, going from about $115 million in U.S. gold, $30 million in Minera Andes to $16 million in Lexam. I like what they're doing. I don't take a salary as CEO. I'm going to make money the same way my shareholders make money, and that's through a higher share price. I think we're well located geographically and in prospective exploration areas. We've got in Lexam some very nice hits in an area that is the largest gold producing area in Canada. So we're just going to go along, explore, and hopefully find what was left behind by earlier operators. In U.S. gold, we have a large silver discovery in Mexico that's moving towards production. We'll have a feasibility study or business plan out by the end of the year. We'll have permitting done in 2012 and hope to start construction in late 12 and producing in 2014. And in Minera Andes, we're already in production in Argentina, silver and gold, and we have a large copper project in northern Argentina. There are a number of incidents in history over the last couple of hundred years where when someone's changed the monetary system, they've taken the gold out of the system. They've either made it illegal to use or they've confiscated it. I hope that doesn't happen soon. That has an impact on me, but it would mean restricting the freedom of movement of capital. But that's happened in the past. Well, the gold mines, they didn't stop mining. In the United States, the Homestake Mining was the largest company on the New York Stock Exchange, and its share price in 1929, if you compared that to the dividends it paid in the 30s, its dividends were bigger than the share price, higher than the share price. So it kept on producing, but citizens were not allowed to own gold. There was a jail sentence offered and a $10,000 fine and a confiscation of your gold. But they were basically trying to drive confidence back to gold. But if you look at it and say, is gold money? And you have to answer the question, it has to be, because the Bundesbank holds it. It's one of the largest holders of gold bullion in the world, and they're not selling it. The Federal Reserve in the U.S. is the largest holder. They're not selling it. Why hold something in your reserves that isn't money? The world is just going back to a time when they're going to be looking for currencies that offer greater confidence in the underlying economy and the currency itself. So I can see countries, and India and Russia are already doing, Russia, China are already buying. I don't know how much further, but maybe we'll see one day China going to the Federal Reserve in Washington and saying, you know, we own a lot of your debt. We'd like to exchange our debt for your gold. Much like led by President de Gaulle when he went in the 60s to the U.S. and said, we've got all these U.S. dollars. We'd like to exchange them for gold. And they were able to do that, and much of Europe was doing that, saying, look, we don't have confidence in this greenback anymore. We want to exchange it for gold. And then President Nixon closed that convertibility, or that what they called the gold window, in 1971, and no longer allowed sovereign states to convert foreign held dollars into gold. You have to look at gold, silver, and any other, even a stock. They'll run up, they'll get it, and then there's a point where they have to consolidate. That usually means a drop, a correction, 10-15%, consolidation, building a base. Right now the trend is continuing. It's a strong long-term trend right now that I see ultimately going to $5,000 an ounce. If you're buying gold or silver, don't put all your money in at once. Buy some today, buy some 6 months from now. To be an investor, you want to be curious, meaning that you go out and look across a wide array of possible investments. And then you want to look at relative values within the sector that you select. You want to look for management that has a commitment. Not only are they passionate about what they do, but they're financially invested, so that it'll make a difference in their life if their company performs well. You want to see that they have that investment, they didn't get given to them free. That it came with some pain, that they had to pay, and if they lose it, it'll have a negative impact on their life. So they're waking up in the morning thinking, how can I do this job better? How can I help my employees do the job better, and how do we deliver value to our shareholders. And delivering value to the shareholders in my book is a higher share price. Going out and buying a company because it makes my existing company bigger is only good if the share price goes up after you've made that purchase. If it goes down, then I'd say, why did you do that? So it's a per share value movement that I'm interested in. The curiosity, the innovation, if you have management that says they can't do anything about it, well, you should sell the stock, because you always want to be looking and saying, what can we do today? It's different from tomorrow, but improves the future. And I always found when I'm running a company, how do you differentiate your market? How do you make it different than all the other companies in a better way? And we used the internet when I was running Goldcorp to look for 6 million ounces of gold. We were the first company to use virtual reality labs to look at ore bodies. We're the first mining company to use that. It was used in the oil and gas industry. So you can look across and you can go to the auto industry and say, how do they do a good manufacturers? Can we apply some of those techniques to the mining industry or to the high-tech industry where they do rapid turnover of ideas, and it's, well, that didn't work, but that doesn't stop us, let's try this. And you just want flexibility of thinking. And that's where I see a lot of opportunity in the older industries, where there's a more rigid or solidified way of looking at the world. And if you can get in there, you can break it apart, be disruptive, and see opportunities others can't see. So you're looking for opportunities. You want a clear vision of where you're going, where that company is going, and hopefully as many people in the organization as possible understand that direction and are working towards that goal. When the market collapsed in 2008, you had a response by the government of the Western world, whether it's in Europe, North America, that was very, very unusual. The response was to put colossal sums of money into the economy, provide guarantees that no one would have contemplated 2 weeks earlier. They were of a size and a magnitude that went beyond the imagination in terms of how big. And then people started reflecting on that monetary stimulation and saying, what is going to be the impact of that longer term? And you would have expected a surge through the economy, but it didn't happen right away. And then in the United States, they had to do it again. And you were saying, well, employment's going to go up and housing's going to go up and all this. It didn't happen. And people are going, well, it used to happen like that in the past, and they didn't have to use as much money to get it started. But now, it isn't working. And then you have situations like Greece, and saying, well, if I'm a wealthy country doing my job responsibly and taking care of my own accounts, why am I bailing out of someone who isn't? And you asked the question earlier on, I suppose, if I happen to be German, I'd be asking that question of my government too. Why are you bailing out those people that weren't doing what they should have done? You've had this huge monetary stimulation of a size no one could have imagined. And yet, it hasn't had the positive impact that all the politicians said it would. And it has to come back, and it seems we're going to have to do it even bigger. And we're going to bail out areas of the economy that shouldn't be bailed out. I just came back from Spain. I hadn't been to Spain before, but I was on the Costa del Sol just before coming up here. And I was so surprised by how heavy the development was down there of real estate, and how the hills were all covered with buildings and cranes that weren't moving. And it's just like this huge overhang of unsold or unoccupied buildings. One individual I spoke to there said, well, there was talk of tearing some of them down because they're not being lived in, they're going to decay, and probably because the tax base is much higher with a building on it than a vacant lot. This has been seen all around the world. Just a belief that real estate's going to keep going and going and going, and people were building and there'd always be someone to buy it. We had a lot of speculation in a lot of areas, and suddenly it stopped, and there wasn't a buyer. It's the day of reckoning is catching up. It's, as I said, easy access to credit, low cost of credit has encouraged a somewhat reckless spending. The crash of 2008 was all about people taking on more risk. They became very careless with risk, believing they could always have access to cheap capital, plenty of capital. And when that stopped, all those risky ventures started collapsing, and they had to pay off. I think everybody was comfortable that everything was going up. How can you be unhappy when everything's going up? Your house is going up in value, your stock portfolio is going up in value. So there was a good mood, and all of a sudden it stopped, and it fell very rapidly, and that shocked people. I go back a year earlier when the subprime blew up in 2007. In August of 2007 marked a point in my mind that was different than any other point I'd seen in my career. And that was, all of a sudden, everything seemed to be falling, like the subprime blew up, and it seemed that every bank in the world for a moment was unsafe. The question popped in everybody, well, not in everybody's mind, but in a number of people's mind. They said, hey, wait a minute. In the past, if the stock market fell and I took money out, I could put it into a bank and I knew it was safe. In August 2007, there was a point that no bank in the world was safe. And you say, all right, where do I put my money? Do I stick it in my mattress? It's no longer a question of how much I'm earning on my money. It's how do I protect my money? Where do I put it to protect it? Then the governments around the world said, well, we can't have this happen. We used to guarantee a little bit in the bank account, but we'll guarantee everything now. And everybody went, whew, that's good. We're safe. The problem's still there. It hasn't been addressed. It's just the governments came along and said, well, we'll print lots of money, which we don't have, but we can print it. And everybody will level out. And hopefully these problems will go away. But we're not seeing employment going back to the old levels. We're not seeing tax revenue there. We're not seeing levels of investment that should have been here with the trillions of dollars that have been pumped into the economy.